This is important because we're going to look at top trades in a moment. And you got a trade opportunity. Gold looked like it was on the way to the downside. It looked like you had a good chance for a drop. But unfortunately, because ultimately that drop was just within this even tighter range than it has been, it doesn't materialize and it runs into support very quickly. There's a feeling of safety in this market, whether you're a buyer or a seller, that move up you can sell into, move down you can buy into, because no one's then sustaining the move down. And that's the difficult situation that we've got. At some point, of course, and make sure you keep this ready in the back of your mind, at some point we are going to get that break, and that's where you'll start seeing a difference. The trade like the one I'm going to show you will actually turn into a continuation. It won't react off the first level and start to bounce. And that's going to be the thing that you're looking out for, that change in the way the market trades. So we're going to have a look at top trades. Now, this is a trade from 1498. If we go back over to the previous. So this is coming up in these couple of candles here on the 4 hour. Ultimately, we not got out the wider range. It was a small peak above the previous day's inside day break and reversal. So a failed break on the inside day, turns back down range. You're looking for them for a drop towards the downside. Now what we'd had all morning is essentially this reasonably tight range between 1496 and 1492.7. You get the breakout. We had a go at it in the morning and that was reversed quite quickly. Once again, we get another break, failed inside daybreak. You drop below the earlier morning high and the reversal starts to come. Now, once you get below 1496, this is where you can start thinking, yes, we're going to get a move down, new lows, potential to take out this little range and keep on going. But because of the coiling in this market, because of its inability to push on, we don't get that. I'll show you the beginning of this move. Well, I'll show you the entirety of it, in fact. But we will speed it up at points. So here comes the beginning of the move. And this is the bit of the move that gets you thinking, yes, there is a bit more movement in this. There is a potential trade. We get below 96. Reasonably low volume coming down into 96. Start establishing a bit of volume at 95.7. But it can't trade back up above 96. There we go again, 95.9 reloads on the offer. Offers start increasing in size. Once again, trades 95.9, but you don't get any further buyers. So this is looking pretty good. This is a chance to be short. It's a chance to be short, thinking, right, well, I want to be short below 96 anyway. We're leaving this low volume, that's helpful. Can we get the continuation down? And they keep reloading 95.9, the selling keeps coming in here. That's all looking good as well. Then you get this fast little breakdown. This is where those sellers have realized that they need to continue to push this. They're going to have to sell lower and lower prices. So right at this moment, you've just seen a big drop in delta. You've seen volume increase. We've seen it move down around about 20 ticks. We're down towards 94, 93 and a half. And we're still seeing the selling coming in. Volume starting to pick up. This is all looking good. You've got some low volume up here. So this little patch of low volume, 95 and a half down towards 94.7. More reason to think that we're going to be going lower. And this provides you the opportunity of an LVN continuation. You sell it below the low volume, looking for a further continuation down. Your minimum target is going to be to the bottom of this range at 92.7. And so this is where you'd be looking at here. Patient, you've either got in higher up and you're adding on, or you're getting in lower down and looking to sell it here as the selling still seems to be able to hold this market lower. This is where we're seeing this build up of volume happening here. The sellers are still trying to sell. The sellers are still trying to get this move going. No result yet, but equally buyers aren't able to turn this over. You're not getting anyone buying 94.6, 94.7, 8, 9, 95s. You're not getting that push up. And any time that you do get a push up towards this low volume, it's getting pushed back on. That's good. This should be giving you confidence that any move further down towards 92.7 at least is one that you're going to be looking for a similar type movement, more pace in the selling, another one of those aggressive pushes down to break 92.7 and start getting you down looking towards 91 and then even much further down towards 1488. Market then steadies up and you get a fair few minutes of this just steadying around these prices. Sits relatively still. Around the high 93.5. It's not really driving on, but that's fine. Yeah, you're still quite happy with this short position here. Stop wise, you're going to be looking at stops. You could have them up above 96 if you really wanted to try and stay in this trade, but some people, you're going to be putting your stop in this zone here around the 95s, keeping a nice tight stop on this. Like I say, this is a continuation trade. You shouldn't be seeing it pushing back on you too far if this is going to materialize into a larger move. What I'm going to do is I've increased the pace of the recording so that we can get through what's actually going on. So you can see it here, and with the pace increase, you can see this up, down rotation. And all this is a case of people are trying to buy it. This is the buyers feeling they're still safe buying it down here. Those are trying to sell it to get this continuation. Sellers feel reasonably safe trying to sell it as well. Each looking for the break either to the upside, downside, and that's going to give you a clue as to where the next move is. The increase in delta, the increase in volume on the drop, and the failed inside daybreak and move back inside range should suggest that you've got at least a target down towards here. That's going to be your main target, or your initial target. The point being, having looked at the market earlier, this very tight range that we're sitting in, this is a market that you have to limit your expectations, because people find it very easy to buy dips. It's becoming the norm to just try and buy the dip on this, and so you've got to be looking at least to start with, a portion of your position has got to be viewed almost as a scalp. The move down to the bottom of this range you need to be pleased with, because of the fact we're not in a phase of breakout just yet. We're not breaking the wider ranges. Yes, this is quite a decent move down. We've got 30 plus ticks on the move down to 92.7. Now, what you'd be looking for here is more selling to come in, for it to hold down like it did up around the 94s, like it did around the 96s. We're not seeing it though. Very, very quick, straight back to all that volume was created. And this is exactly the kind of thing that will happen when you get these very tight consolidated markets. They don't want to move. No one needs to drive the market one way or another. And so this is then the scenario that you get. If you limit your expectation a bit, it allows you to get out down here. And certainly if you just make sure you're monitoring that idea that 92.7 could stop it, anything that bounces quickly from there is a chance to exit this trade. It's not ideal, it's not the trade that really you're actually looking for. You know, you're ultimately looking for the larger move. You're looking for the break of 92.7 and continuation. But the fact that it's just not driving that, the fact that it gets down to the bottom of range and very quickly bounces, should be a good clue to get out. But the nature of the market currently is enough to be able to judge that and at least limit your expectation. And that LVN continuation then becomes more of a scalp than a genuine continuation trend following trade.